Hello, everyone, and welcome to CI Live. Here we discuss the latest developments in global commodity markets. My name is Rob Hatchett. I'm a principal analyst following the cotton market based out of Memphis, Tennessee. And today I'm joined by my colleague, Dipanshi Agarwal. Hi, Dipanshi.
Hi Rob and hello everyone. I'm Dipanshi Agarwal, Principal Analyst on the Apex Crops team and based in India. I focus on Asian rice and cotton markets.
Our topic for today's CI Live is cotton, with a particular focus on the evolving tariff dispute between the U.S. and China, two of the most prominent players in the global cotton market. Today, we'll briefly explore the impacts and implications of the ongoing dispute between both nations.
It's a very relevant discussion, especially now as both countries are adjusting their trade strategies amid ongoing tensions. These tariffs are not just political tools, they are reshaping global cotton supply chains, trade flows, and pricing.
Yeah, so for some context, let's start with the tariff story itself. U.S. China trade tensions are nothing new, but they escalated rapidly early this year with the return of the Trump administration. February brought about an initial 10% on all Chinese imports into the U.S., before March added another 10%, and by April, things got out of hand and tariffs spiked to as high as 145%. After the two sides talked in Geneva in May, things cooled down a bit. The U.S. cut tariffs on Chinese goods to 30%, and China cut tariffs on the U.S. to 10%. These tariffs remain in place today, here early in October, and talks are scheduled to resume early next week. Dipanshi, given this timeline, how have you seen these tariffs impact China's textile and apparel exports?
The effect of these tariffs were immediate. When first time the tariff was imposed in February, the exports to US fell to about 56%. And by April, the total shipments were down by 18% compared to last year. The upward trend, which we were seeing till January, completely reversed. And as a result, mills' profit squeezed, inventories piled up, and spinners become cautious. But after the truce in mid May, month on month exports started to rise gradually. By August, exports to US were just about 8% below last year, with 30% tariffs still in place. So, yes, China took a hit, but it is trying to adjust quickly. China is also trying to diversify its destination markets. Exports to ASEAN and EU nations have grown. However, they can't absorb what US market provides. If we look at cumulative exports from China to all the countries from January to August, the exports are still 2% below last year same period. Now, at the same time, the Uyghur Forced Labor Prevention Act adds another layer of pressure. Since 2022, any goods linked to Xinjiang cotton face strict import bans. To cope this, many Chinese firms have offshored their final manufacturing stages to countries like Vietnam, Cambodia, and Bangladesh, which allows them to have access to the Western markets, but that is not a perfect fix. So, Rob, with Uyghur Forced Labor Prevention Act and tariffs together in place, do you think US buyers might start permanently shifting away from China? Or, in other words, can the US realistically replace China as a textile supplier by shifting to ASEAN or South Asia?
Yeah, I mean, that's the big question, Dipanshi. U.S. retailers have been trying in recent years to diversify away from Xinjiang cotton. But still, the truth is that those other economies just don't have the infrastructure or scale needed to replace China fully. So the U.S. might seek short-term diversification, but not a permanent shift. For a little bit of perspective, Chinese supplies millions of tons of textiles and apparel annually to the U.S. Even if Bangladesh, Vietnam, or Cambodia expand, they still can't fill that gap. Meanwhile, the U.S. consumer market alone imports over 3.3 million tons annually, which is more than 40% of all advanced economies combined. So in reality, the U.S. still needs China and China still needs the U.S. Also, I'd like to point out at this point the key issue for the U.S. cotton market, and that's the void left by China in its current export program, as U.S. cotton producers are feeling the pain from declines in its top market. Both China's overall imports and the share of U.S. volumes have fallen sharply in recent years. Based on our latest export data, China has only 62,000 bales of sales on the books, which is down from about 300,000 bales last year, and compares with about 2.2 million bales 5 years ago. So it's obvious that the U.S. cotton farmer is feeling the pain with China's absence. Dipanshi, can you give us a little bit more insight as to China's cotton demand and its shifts with production rising in recent years?
Sure. So China is becoming more and more self-sufficient. If we look at last year's crop, that is 24-25 marketing year crop, that is estimated at around 32 million bales, 17% higher than last year, with another increase forecasted for 25-26 marketing year at somewhere around 33 million bales. Imports in 24-25 marketing year have collapsed to around 5 million bales, 65% lower than last year, and as I remember, the lowest in the recent history. Xinjiang, with increased mechanization, is driving the rise, while other regions are showing a decline. If we look at from US exporters' perspective, there is a double blow: tariffs plus reduced demand. And with Brazil emerging as the dominant supplier, the US is struggling. So, Rob, does this mean we are essentially back to square one, where both the nations still need each other despite all the noise?
Yeah, exactly, Dipanshi. It's still in a symbiotic relationship. The U.S. consumer needs China's manufacturing to keep retail shelves stocked, while the U.S. cotton grower needs access to the Chinese fiber market. Meanwhile, China needs the U.S. consumer market to sustain its textile and apparel industries. That's why the May truce was so important. It wasn't a solution, but a pause to acknowledge reality. Before we wrap up, Dipanshi, how are Chinese mills responding to the truce's extension through mid-November?
So, mills are responding somewhat positively. We are seeing a modest rebound in cotton yarn sales, with mills' margin improving slightly. Spinners have become more active buyers as the traditional peak season approaches, and export orders have also picked up, though the overall environment is still cautious. However, at the same time, China's recent stimulus, ranging from consumer loan subsidies to monetary easing to fiscal support, aims to boost domestic demand. Taken together, these factors should lift Chinese mill use to about 38 million bales in 25-26 marketing year, up 1% from the last year.
Good things. So, to sum it up, both sides know they can't fully decouple without hurting themselves. The tariffs hurt both sides, and there are further complications focused on forced labor restrictions. Combine that with China's falling cotton imports, and the U.S. is caught searching for alternatives. Still, at the end of the day, both economies remain well tied together, and the global cotton and textile markets are caught in the middle in a tug of war, with the next few months being critical.
Totally agree. It's less about winning and more about managing interdependence.
So that's it for today's CI Live. I want to thank Dipanshi and you, the listener, for joining us. If you found this discussion insightful, please note that we have much more in-depth weekly analysis and reports on cotton markets. So please get in touch with us to find out more. Thanks again and see you next time.